Thanks for joining us, everyone. My name is Shih. I'm the founder of Structure Research, joined today by Jabez, our head of research. I'm dialing in from Toronto in Canada, and Jabez is in Los Angeles. Thanks for making the time. I know summer is certainly a time to kind of get out, especially in this environment we're in. I know some of you are suffering from webinar fatigue, and we are too. And that's probably why you haven't heard from us in a few months. We did something in June, and now we're trying to pick up the pace as we move into the second half of the year. So we thought we'd try to hit as much of a cross section as possible, cover the global hyperscale cloud market, give you guys just a quick update. This shouldn't take too long. Quick update on what we're seeing, our market share numbers, and we're really proud of the new tracking that we've been working on for quite some time now, and we'd like to present you the first iteration of that. A lot of the content you'll see is published in our quarterly market share report that clients should be familiar with, and the new tracking appeared in the report you may have received about 4 to 6 weeks ago. I know it's a little late. We're moving into Q2. Most of the hyperscale guys have reported, and we'll comment on what we've seen so far. So this is the agenda. Just a quick, I'm going to take the first two, and then Jabez is going to take the bottom two. I'll show you some of the tracking, dig a little deeper into the numbers. I'm going to give you try to give you a perspective for those of you here today who are interested a little more on the cloud side, and those of you who are, of course, interested in the wholesale or hyperscale colocation and the leasing side of the game. We'll try to straddle both parts of the world in this discussion. So just want a quick shout out to Digital Realty, a company I'm sure you know, who's been supporting a number of our webinars. So thank you very much for making these possible. And hopefully we'll continue to work together on these into the second half of the year. Introduce myself in the beginning, so we'll have to skip that. I wanted to just start with a quick level set. This is shared by some of our friends at Newmark Knight Frank, which I thought was, a really just kind of sums up the kind of world we've been in since March or so last year. Certainly this industry has been resilient, has done well, has performed at a very high level versus a lot of other different types of categories, especially when you think about real estate from that perspective. But when you look at what is happening around these industries and how digital infrastructure broadly has supported it, you can see the kind of returns and the kind of growth in all parts of the ecosystem that you guys are involved in. So I think this is just a quick level set. I think the news is good. Hyperscale continues to grow, and the data center, the MSP ecosystem, interconnection platforms that are attached to this ecosystem receive extremely positive spin-off benefits and effects. How do we think of hyperscale? Just a quick summary. These are the companies that we group into our analysis of the hyperscale community. It does not include, I'll first mention, it does not include the likes of, say, a DigitalOcean. But I think that this I think is pretty uniform across most definitions of hyperscale. So we've grouped it. I think the big three, pretty obvious to most. We've got the other two on the bottom there. They're a little more enterprise focused, still we feel fairly categorized in the hyperscale grouping, as well as the China-based clouds. There are a few names there that are quite familiar, and then there are a few there that are starting to accumulate scale. And we think just in terms of the scale and scope, especially when you consider the broader ecosystem around wholesale data centers and interconnection, is going to be also driving this part of the market, and has meaningful and significant characteristics that would define them as hyperscale. So this is just a summary of that recent report I mentioned when I opened up first quarter comments. I know we're quite, as I mentioned, I know we're already into the second quarter reporting period. But this is the 5-year CAGR, our latest update, still hovering in the mid 30% range. And as you can see from that bar chart, we're projecting significant growth over close to 125 billion when we finish up this year, and crossing 500 billion as we get to halfway through the decade. This is kind of on the left, a bit of a historical what we had projected for 2020 and what that will look like on a year-by-year basis. And then on right, the growth rates. You'll see that we don't see this sector dipping below 30% year over year, even as it scales and adds tens, if not hundreds a billion in value in revenue generation over on an annual basis. And you can see, dig through the details, as I mentioned in our report. What we've done here is just break that down on a quarterly basis. You'll see that probably many of you track AWS quite closely. You'll see that we've cut off here at the first quarter 20. That number, just to verify, the second quarter number, I think, is 14.8 billion. Google, Microsoft are all still on the same trajectory, even after looking at the second quarter results. And what we're seeing is potential, especially when it came to the results coming from AWS and Google, is we saw signs of acceleration. If you look at AWS again in the percentage year-over-year growth on a quarterly basis, it's been starting to, if you see 28, 29, 29, 29, 28, 32, and in the last quarter, I think it was 36. So it looks like they've gone through what they've tended to do over the last, say, 5 years, which is go through kind of cycles of growth. Even as it scales, they'll build out a lot of capacity. They'll start to expand into new markets and then start to fill that up. So that's part of it. And as well, of course, you can't, I think it's impossible to ignore what's going on just in the larger macroeconomic environment with economies opening up, and of course the pandemic-driven surge to cloud-based infrastructure in all facets of life. So I'll just push along here. So what's driving this? I think it's no secret. I think on the one hand, we like to kind of think of it in terms of where what's driving the growth, what ends up on cloud, and then a good portion of that cloud sitting on in a co-location facility with a large multi-megawatt footprint. The end users are coming from really across the spectrum. This chart here kind of highlights the born on the cloud category, the new Fortune 500. The Fortune 500, I think they said, just completely turns over every fifth. I forget what the number is, so I'm not going to throw one out there. But these are new young companies that have built sizable organizations with a lot of, and some of them like an Airbnb, like a Netflix, that are entirely 100% on cloud-based infrastructure. And a lot of that cloud-based infrastructure, of course, sits in a co-location environment. So that's kind of one kind of significant source of growth into the sector. It's also coming from, even Twitter might not be kind of a good example of a traditional enterprise, kind of a more, still again a younger company, but this is a company that did not use the public cloud for quite some time, that started with co-location and built out its own infrastructure in co-location environments, and then started to use Google Cloud, and then started to use AWS primarily, I think, for storage, and is kind of slanted to Google Cloud for some of their analytics tools. So another driver of growth, moving, not necessarily lifting and shifting and migrating to the cloud, but using the cloud at a very large scale for specific types of infrastructure. As I mentioned, a little more raw compute and storage on the AWS side. On the Google side, a little more towards the analytics and the artificial intelligence and machine learning tools that you would have at your disposal. When running on those clouds. I like to show this. I think some of you have seen this in terms of how infrastructure services, cloud hosting, co-location, how it's driven. Kind of the 80-20 rule that many of you learned in business school kind of applies across this ecosystem. And so when you think about it, especially when it comes to the data center business, existing customers are a bulk, if 80%, if not more, of the business, and they drive new additions to a customer base, drive a smaller percentage. The same thing when you take the perspective of a single customer, right? They may be spending the large portion of their spend with the service providers on raw compute and storage infrastructure, and 20% maybe around value add. Of course, these are not hard and fast numbers, but numbers that but directionally kind of paint a larger picture of what's going on. And that's, again, I think, in play here when we look at the hyperscale market and how we have built our projections and our tracking. We find that increasingly a lot of the growth, new adds to the cloud are still happening, of course, but they're not necessarily happening at a rate that they were 5 to 10 years ago. Certainly more of the growth now is you'll hear on the earnings calls from like AWS and Microsoft, will talk about consumption or usage-based growth when they kind of vaguely try to describe what's going on in their cloud business. And that points to just more workloads, expansion, more storage, more compute, more infrastructure in different geographies and in different locations. But on top of that, you're seeing that value add really start to drive things. So again, we kind of take a kind of broad stroke, but when you think about analytics and machine learning and AI, these are kind of the buzzwords we like to throw at it. But it really, at the end of the day, it really is software, tooling, tool sets that organizations use to optimize their infrastructure, to manage their infrastructure, to drive data, to understand their data and drive value into their business. All of this, of course, originates back to getting on and using a public cloud infrastructure platform. So these are some of the vectors that are driving growth. We feel that it's, I think what's happening in the hyperscale world is you're seeing just almost like a perfect storm of everything. More adoption coming from, late adopters or laggards. You're seeing expansion in terms of capacity, in terms of new workloads, in terms of retiring or sunsetting old data centers, moving into other geographies, getting out closer to end users. And then at another level, again, as I mentioned, the use of these value added, the value add, all the innovation that the public cloud platforms are able to scale and deliver to the customer are increasingly, our customers are learning about them, they're starting to deploy them, they're starting to buy them, they're getting more value out of them. And this all together is just accumulating more growth. So, if you sit back and say, hey, how is this happening? How is growth still, 30, 40%, 30, 40, 5-year CAGR across hyperscale, even though the business continues to add 10, 20, 30, billion dollars of value every half year or so, this explains it. So I know it might be a bit of an oversimplification of what's going on, but at the end of the day, these are the largest trends. And I think what sometimes another part of this that's happening is that perhaps gets kind of overlooked in the news and the headlines and all the great logos that are disclosed by the public clouds as their new customers. At the end of the day, to make use of these tools, data is moving to these clouds at an unprecedented pace, and that's just driving a ton of storage consumption to enable these tools to make use of these tools. And they got to have to make use of these analytics, they have to have data to analyze, and so that just kind of just creeps up. You don't delete anything, the storage continues to accumulate. There's a certain amount of stability and gravity, as we know, being in this business, and that again contributes to the foundation of the business, and then explains why, if you put all that upside on the table with the expansion that I just described, you understand how everything accumulates and continues to grow. This is, I think, many of you who are clients, I think, have seen this before. It's just a quick summary of where we're seeing leasing and building trends for these hyperscale clouds to build, to handle all this growth. They're going to, the cloud doesn't live in the sky. I think, as the joke goes in our industry, it does live in a physical entity, a physical data center. Just a matter of who controls it and who builds it. Does the hyperscale cloud take this on by themselves, or do they outsource to a third-party colocation provider? As you'll see, just a quick high-level set at the bottom left grouping, the Chinese clouds outside of China, Oracle, IBM, are pretty much not taking part in any sort of meaningful self-build activity. Their network nodes, their compute, their availability zones are all primarily in colocation environments. That's great for the third-party data center industry. The big guys tend to increasingly use a mixed strategy, and AWS, as you'll see, I think, is probably the one that has started to, just given its scale and just the unique nature of its requirements, kind of tends to self-limit in a way. It's use of colocation in certain markets, not all, around the world. So it's definitely, in terms of kind of where the trend lines are going, we see that they are definitely using more of the self-build model. I think Google and Microsoft, we find, are, in terms of our tracking, are probably a bit more modest in that transition. But in terms of their leasing trend, I've got it here as pointed upward because I think it sometimes doesn't, we kind of focus really closely on the public cloud, that service line and the consumption of that when it comes to data centers. But there are other, I think that what makes Google and Microsoft a bit different from an AWS is not just the scale, but also they do have other platforms, other products and services that are driving a lot of this consumption. And so I think that that's important to point out, not just because it's different from AWS, but also because they are different from some of the, like an IBM or an Oracle when it comes to hyperscale infrastructure. Another thing I think that was interesting that we picked up on recently was some disclosures from Microsoft, again Google and Microsoft, on some of their legacy services that actually don't sit on their cloud infrastructure platform, which may come as a bit of a surprise. For example, YouTube is primarily on kind of proprietary, I guess, let's call it YouTube infrastructure that's not running on the Google Cloud platform. Both are, and you'll see some of the kind of the properties and online properties and platforms that Microsoft has on the left. And what we're seeing is that these companies this year have made it pretty clear, especially if you dig through the earnings transcripts as well, that they are starting to move these to their public cloud platforms, and there's going to be a spin-off effect for hyperscale cloud growth as well as wholesale colocation consumption. So our comments are meant to be global in scope. This market is definitely global and increasingly, reaching to corners of the world, far-flung corners of the world. Europe, I think, in the last, we find the last 6 to 12 months in particular, has been a hotspot. We find it's been, unique in that, just kind of the obvious characteristic of Europe is that it's a somewhat that it has so many different countries and different jurisdictions. And that's created the need, in many cases, for hyperscale infrastructure to set up in country. Once a market reaches a certain level of critical mass, and so AWS can build, I think it's 5 or 6 regions across the entire United States to serve a single country, but to serve all the different 20 or 30 countries in Europe, many of them will require in-country, even if the population might only be 5, 10, 15 million people. And so that is definitely driving a lot of what we're seeing on the ground. And Jabez will show you some of the hot spots in our new tracking that we'd like to share with you. Geopolitics, we find, is an interesting kind of nuance out there that drives where hyperscale is going, and what markets will see hyperscale infrastructure, what markets global data center operators are trying to enter or chasing opportunities in. This is not restricted to any part of the world, really. There are fault lines everywhere. We have the North America, we have 2 border between the US and Mexico, US here and with us here in Canada, the line between the UK and the European Union. We find that certain countries are not welcoming to some of the China-based platforms or social media platforms that are out there, but of course, see no shortage of growth in the US. But in certain parts of Asia, we find that the Chinese platforms will contribute to significant hyperscale growth in some markets, but not in others. So, for example, in Asia, we've seen, we anticipate that in a market like Indonesia, you will see pretty much all those hyperscale platforms, that 9 of them that we outlined in the beginning, whereas in a country like Australia, you may not see as many of them. And so that'll change the dynamics of the hyperscale growth in those geographies, notwithstanding, of course, the different sizes of those countries and those markets. But definitely, I think the way things are going around just data sovereignty and around access to data and certain geopolitical fault lines, we feel that has a increasingly direct effect on what's going on and how companies set up the infrastructure, where they set it up. And then, of course, the ecosystem that supports it has to consider that all as well. So large opportunity, a lot of bets being made on the operating side, on the investment side. These are just a quick snapshot of some of the entities involved. Certainly, there's been no shortage of interest. Jabez and I has spent a lot of time in the last year, as well as since this pandemic started, fielding calls from new investors, people who are new to the space, who see what's going on with digital infrastructure, see the returns, like with the slide I opened up with, and are trying to understand what's going on in the space and how to be a part of the value chain. Before I pass on to Jabez, who I wanted to just quickly highlight, we talk a lot about hyperscale and the global cloud build out. What's going to happen, what I think is really interesting, what's going to drive another phase of not just growth for the hyperscale platforms, but also on the data center co-location side is how to, I mentioned 5 or 6, I think that's 5, 4 or 5 regions in the United States. How do they serve, the rest of the country? The answer is in those red dots you see there. This is kind of AWS's footprint, roadmap for local zone in the United States. So it looks like the answer could be, we're not going to build, we can't necessarily scale in the middle of the United States, scale kind of a region with 3 availability zones, but we'll have targeted infrastructure that could be 100, 200, 500 cabinets in strategic locations to reach, to get out to the edge, to get closer to clusters of end users that are now hitting that critical mass. I think the interesting part of this is that AWS tends, so for you on the data center side, AWS tends to self-build when they can, get that when they can achieve significant scale. They're not likely to achieve significant scale in some of these other markets. And so, what we've seen so far is that AWS has tended to follow the partner path when it comes to setting up local zone, whether it is with a co-location provider or whether they're in a telco data center or a wireless aggregation point. So the spin-off effect into the internet infrastructure ecosystem, I think we would argue looks, there's, we're optimistic. We think there's upside there. And then you're going to start to see this, of course, expand to other markets around the world, probably starting with the more mature ones and then getting out there further. And I think you'll see the other clouds, as I think they're probably still in their global build out phase, the initial footprint phase, but before they got to think about how to get to the second tier and the edge. But AWS already, I think, has a plan. They maybe not as clear and forthcoming about it, but I think this map kind of is telling, and their strategy of kind of building less on a global basis, big but less in less locations, I think makes this kind of the logical next step for them. And so I think that'll be something to watch for, definitely towards the end of this year. This rollout has been pretty slow. I think there's 14 local zone locations and only 3 or 4 are live. And this started, I think the first local zone came back in, I think December 2019, around that time frame in Los Angeles, probably not too far from where Jabez is sitting. Last slide before I pass on to Jabez. Just wanted to reiterate the point that this hyperscale cloud growth really does have a significant spin-off effect to pretty much all parts of the internet infrastructure ecosystem, whether you're an MSP handling customers on different types of infrastructure platforms and helping them with their outsourcing strategy, which inevitably leads to a conversation around public cloud. On the data center side, you might be a little more oriented to interconnection, or you might be very targeted at the wholesale or hyperscale data center game. But all of these pieces work together to allow customers to get up and running their infrastructure in this kind of environment. And just given where traditional infrastructure has been and where it's moving, you can expect that most likely everything new is going to land in this ecosystem, and the old is headed this way at an accelerating rate. And I think that's the theme, just to give you a highlight into the second half of the year. The first 2 quarters of this year really gave us a sense that hyperscale is starting to accelerate, given all this kind of perfect storm of factors, along with just the maturity of the industry, as well as the pandemic environment raising the profile and adoption levels. And so I think that'll be something to look for as we move to the second half of the year. Jabez is going to highlight some of this new tracking, and I'll pass on to him.
Thanks, Phil. I would need you to unshare your screen, and then I'll share mine.
Oh, yes, of course.
Thanks for that, Phil. I think Phil laid a really good kind of macro environment for how hyperscale cloud is trending in terms of growth, in terms of leasing. And so we're going to dive a little bit deeper into the specific hyperscale tracking quarterly data that we've been publishing and will be publishing on a quarterly basis. We used to publish this on an annual as an annual report, but given the amount of activity that we're seeing, the Manix expansion and cloud regions being added across the world, we kind of transitioned that annual hyperscale cloud report into a quarterly one. So that's made available to all our subscription clients. If you're not a subscriber and would like to hop on a trial for our research, we're happy to have that conversation with you. But again, these next few slides are going to be primarily lots of data, lots of charts, so stay tuned. Feel free to take screenshots. We had a question about slide deck sharing. We won't be sharing the slide deck for the webinar, but we will be posting the webinar on our YouTube channel for free kind of on-demand viewing. So I just want to be respectful to the clients that subscribe to our research and pay for these reports behind the paywall. And we also want to try to make some of this available to the public as well. But looking from a quarterly, year-over-year growth standpoint, Phil showed a table earlier about the quarterly growth numbers, but visualizing this on a chart, it becomes fairly clear that the US clouds have, if you look between beginning of 2020 into Q3 of 2020, we did see some deceleration from the US cloud. So Microsoft, AWS, and Google showed some slight deceleration. And interestingly so, Alibaba and Kingsoft saw acceleration during that period. And then, it kind of flipped the script, because if you look from Q3 2020 to Q1, Kingsoft and Alibaba have both shown pretty major deceleration in growth on a relative basis, but the US-based clouds like AWS and Microsoft and Google have either accelerated or shown some stability in terms of growth rate. So pretty interesting dynamic that we're seeing here play out. And then if you kind of group those together, as we call it US versus China hyperscale to kind of give you a more simplistic view, and then the gray line is just the overall kind of hyperscale growth. You'll kind of see that noticeable drop off between Q3 of last year and Q1 of this year. I think Alibaba showed some further deceleration, minor deceleration growth in their Q2 results, and as Phil mentioned earlier, AWS showed some acceleration as well. So, really kind of the US clouds are really driving a lot of that growth in the last couple of quarters. And a lot of people talk about cloud growth rates and annualized run rate, but I think a really interesting kind of way to view it that's maybe not kind of visualized in most of the research reports that I've seen is just looking at the quarterly year-over-year growth, year-over-year revenue added. So just to give you a sense of the scale of AWS, even though they're growing at 37, 38%, and Microsoft is going at 50, 60%, and Google's growing that same tranche, and Kingsoft at one point was growing at 80%. AWS is still commanding the lion's share of the market share in terms of revenue added per quarter. So this is a line chart, but this bar chart will give you a really good sense of how that revenue is being distributed amongst the publicly traded public cloud platforms. So AWS in Q1 accounted for half of the hyperscale cloud revenue, not global, but in respect to the other 4 publicly traded clouds, which are not small themselves. I mean, they account for the lion's share of it, and Microsoft 30%. So you can kind of see the scale at which AWS is driving their business moving forward. One thing that we did start tracking in our hyperscale report on a quarterly basis is availability zone count, and we focus mainly on the top 3 hyperscale clouds here, but we do that for all the hyperscale clouds in our report. But as you can see, Microsoft has the most number of availability zones, and that really speaks to the different deployment models or strategies that Microsoft versus AWS. AWS, when they expanded globally, they centralized more across key markets and built a lot of kind of capacity within centralized core markets, whereas Microsoft followed a different strategy, which was to deploy in as many markets as possible, but maybe fewer availability zones per market to start with, and fewer capacity compared to AWS per market on a relative basis. So as you can see from an AZ standpoint, AWS and Google has some catching up to do to reach the level of Microsoft. And looking at it from incorporating all of the hyperscale clouds together. You can kind of see the market share in terms of AZs that we're tracking. I think one important thing to note is that we're there's kind of three tranches of kind of expansion tracking that we're doing. There's on the top level, you have cloud regions. So when hyperscale clouds announce entry into a new market, they'll typically deploy what's known as a cloud region. And then within these cloud regions, they will deploy one or multiple AZs or availability zones, depending on the size and adoption maturity of the market. So you go from cloud regions to AZs, and then within, as they deploy these cloud regions, even pre-cloud region, they may already have cloud on-ramps in there to allow their customers to on-ramp into a compute node that may be in another market or in another country, for example. So what we also want to track, and what we've been tracking, I think this is probably the most interesting chart than the AZ chart earlier, is what's planned. So everyone wants to know where's the puck headed. Who is more aggressive on the expansion front, and it's pretty clear that Microsoft has been the most aggressive in terms of expanding their AZ count, even though they're already pretty far ahead. As you can see, Google's also been stepping it up ever since 2019, and then we recently saw an uptick between Q1 and Q2 for AWS. So there really is a heating up in terms of AZ expansions, as I think Phil and I have been talking about this trend for many webinars, is that there's a decentralization of hyperscale going on across the rest of the world as they quote unquote try to fill gaps on the map, right? So they centralize in core markets, and now they're looking to expand into localized markets for various reasons: performance, data sovereignty, data privacy, and so on and so forth. And then this graphic I really like as well, because and it's kind of an eye chart, but on the left hand side, you'll know it's depicting the global hotspot. So the left side map will show the markets that have more than one hyperscale cloud expanding in a market. So for example, in Madrid, there's the top 3 clouds. In Paris, there's Oracle and Google. So this is kind of showing you where the hotspots are, like where multiple hyperscale clouds are focusing their expansion plans from a cloud region standpoint and availability zone standpoint. And then the right-hand chart shows the markets where only a single cloud is focusing on expanding their either AZs or cloud regions. So, there's a lot of markets on the right-hand side that, certain clouds have picked as a priority, but I think the left-hand chart is really a clear picture of where the really hotspots are in the world. And you can see Latin America starting to show up, many parts of Europe, even in, tier 2 markets, and even like smaller tier 1 markets like Paris, Milan, Madrid, Paris are starting to come on the radar. Australia has seen some outsized hyperscale activity. Jakarta, that we recently published a report on, is seeing hyperscale expansion, and even parts of the Middle East as well. So really interesting to visualize it this way, just to show you where multiple clouds are looking to deploy. And then looking at it from a cloud on-ramp standpoint, you can see that Google has the most number of cloud on-ramps based on our tracking, followed by AWS and Azure. So not really a surprise there. I think Google Cloud, from their kind of core compute deployment strategy, they've deployed in fewer markets than AWS and Microsoft. So I think it makes sense that they kind of offset. They tried to offset that with more cloud on-ramps to feed into those more distant compute nodes. So I expect more catching up to do from some of the smaller clouds out there, but for right now, I think this is a good picture of what's going on from a cloud on-ramp standpoint, from a hyperscale basis. And then from a provider standpoint, looking at which data center providers have the most number of cloud on-ramps, I think no surprise to everyone that Equinix has the most number of cloud on-ramps sitting within their data centers, followed by Digital Realty. And we're pointing out that the Digital Realty number also includes Interaction in Europe. So we kind of group that together, given that the acquisition is now closed. And then you kind of see some of the usual suspects like CoreSite and Cologix and NixDC, Global Switch, NTT, STT, Cyrus 16Tera, and then the remaining kind of 80 data center providers have a combined 146 of the rest of the cloud on-ramps. So it's still fairly heavily weighted towards kind of the top 10 providers, but we do expect some more kind of decentralization of cloud on-ramps into some of these other operators as well. So this is just translating that chart into a market share percentage number. Equinix has 34% of the market share for cloud on-ramps, followed by Digital Realty at 13%. I think this is one of my last slides, or if not the last slide, but just looking at it from a region standpoint, Asia Pacific has almost caught up to North America in terms of cloud on-ramps. And this makes sense, right? Because Asia Pacific is the most fragmented region in the world. So it makes sense that there would be more cloud on-ramps relative to North America in order for these hyperscalers to reach more pockets of population within Asia, whereas in North America, because most of the population is kind of centralized along the coast, either the East Coast or the West Coast, or in the central US, that you don't need a ton of cloud on-ramps in North America to serve most of the population. So expect the Asia Pacific cloud on-ramp number to start eclipsing the North America number moving forward. And then Europe as well, more fragmented than North America, but maybe less so than Asia. We expect that to also eclipse North America. And then, obviously in the more emerging markets like Latin America and Middle East, Africa, those will come up as well as hyperscalers continue to seek out more growth markets to expand their platform into. So I'll stop there. I'll hand it over to Phil as he kind of closes it out, and then we can head over to a time of Q&A. So back to you, Phil.
Excuse me. Thanks, Jabez. Sorry. This is the data and the content we wanted to present. Hope you enjoyed it. If you are a client, definitely if you have follow-up questions, let us know. If you are not a client and you'd like to see more, please do reach out to our team. We have a couple other members of the team, couldn't fit on this slide, but if you're interested in learning a bit more about us, reach out to Candice Rodriguez, who is on the right. And this is a cross-section of our team. As I mentioned, we have another analyst here in Toronto, as well as a new research associate in Australia. So our team continues to expand as we try to cover more and more of this global market. Love to take a few questions. As Jabez was speaking, I answered a number of them. Just type them out there. Hope you saw them for those who asked. I wanted to maybe just comment on one of the questions, a couple questions around why a DigitalOcean, Linode, or even an OVH in France is not included as a hyperscale provider. And I think the short answer is, first of all, I mean, as you do these things, you always have to draw the line somewhere. I would say that our choice of those 9 clouds are based on both the present, the current size of those platforms and what we reasonably think is the future size of those platforms. The others like DigitalOcean and an OVH, I think, have significant scale, but are probably not likely to grow and expand in this type of hyperscale pattern that I think is quite clear and particular, has its own unique characteristics. And I think that the Chinese clouds will have that massive scale, maybe not in now and in the next year, but definitely we think reasonably within a 2 to 5 year time frame. Whereas the likes of like an OVH, which probably is the closest to the cutoff, is probably going to grow more like a typical infrastructure business, a little more modestly, consistently and steadily, but not in a very aggressive fashion. I think that's kind of the main kind of, it is a bit of a nuance and a judgment call, but that's why we draw the line there. So I thought that was a great question. And we'll continually, nothing is set in stone in terms of how we approach this. We are always willing to kind of come back and reevaluate and reconsider what we've done, and we appreciate the feedback and responses from everyone. There's a bunch of questions left in the queue, and I'm going to toss, I guess, why don't we, a few of them from Christian, but Jabez, maybe we would take the first one from Joshua. He thoughts on Taiwan and New Zealand quickly.
Yeah, I can take that. So yeah, I think those are pretty interesting markets for us. I think Taiwan is more so a little bit more interesting than New Zealand, given its location in APAC. We have seen a number of, I think Taiwan is kind of flying under the radar as a hyperscale market. I know there's challenges to the market, and that's why historically it hasn't really, exploded as a hyperscale destination. But I think quietly Google has built a sizable footprint in Taiwan from their self-built campus in Changhua County. I think Google's now onto their third self-built in Taiwan. So it's definitely a market that Google has landed in since I think it's 2012 or 2014, and they have liked that market enough to expand in there multiple times. I think from a location standpoint, Taiwan sits just very strategically, geographically equidistant to many Asia markets. There was a lot of talk that the geopolitical issues in Hong Kong has made people consider the Taiwan market as a potential alternative to Hong Kong. I mean, there's some truth to that, but I still think Hong Kong is still a very strategic market and will be so moving forward. You can't just lift and shift all the submarine cable aggregation connectivity from Hong Kong and just move it to Taiwan. Granted that there may be future submarine cables may look to decentralize away from Hong Kong and look to other markets to land into, and I think Taiwan is a very viable option. There's still a lack of hyperscale capacity or hyperscale co-location capacity or even carrier neutral capacity in Taiwan, which has led to the Google self-builds. I know Microsoft announced a cloud region there, which is spurring a lot of activity and inquiries about that market. But I think long term, I think Taiwan should be a stronger market moving forward, given its strength in chip manufacturing and semiconductors, which has very close ties to the whole hyperscale value chain, right? So I think in the future, Taiwan will make for a very interesting market, especially from a hyperscale self-build standpoint. If there's no co-location provider that can bring in hyperscale kind of quality capacity in that market. New Zealand as well. I think New Zealand came on the radar because of the Microsoft announcement. Their intention is to deploy cloud regions in the New Zealand market. Right now, most of the activity is centered around Sydney and Melbourne. I think Melbourne is that next kind of market in that ANZ region that's seeing a new cloud region deployed by multiple hyperscalers. Sydney has gone bonkers in terms of new build activity and investment pipeline. But I think New Zealand will eventually catch up. I think, I wouldn't put it past Google to end up building a self-built data center in New Zealand, given there's likely more access to renewable energy in the New Zealand market, for what I'm hearing. So Google tends to do kind of that off the radar or the non-orthodox type self-built location. They did it in Taiwan to start. And I wouldn't be surprised if they did it in New Zealand, right, to cater to that greater ANZ region. But I think those are currently our thoughts for our New Zealand market. Phil, if you have anything to add, or if you want to move on to the next question, up to you.
No, let's move on to the next question. Christian has a few of them. Maybe we'll try to first tackle. Maybe I'll just quickly comment, and Jabez, you can build and maybe provide some examples. The question around, do you have any idea on how the sizes of availability zones look across hyperscale clouds? I would say kind of maybe the most important point is that it's very different across geographies. It definitely depends on what market you are looking at. Certain markets that have explosive growth are seeing progressively more. These AZs are looking bigger and bigger, and in some markets, they kind of just creep up. So I can give you an example from where we are. In Canada, we saw the first availability zones, pretty conservative. Probably around 2 megawatts, maybe 2 or 3, and then as the market, the market's maybe 4 years old now. We've seen that creep up into the 3 to 5 range, and then you see that creep up. Then you see kind of maybe an inch up in terms of density, like 10, 15, 20, depending, I guess, on the year and the location, 10, 15% or so increase in densities. And then, that, in other markets, you'll see much different dynamic. Maybe I know Jabez has seen some really crazy stuff in Australia, and Tokyo, for an example. Maybe you want to give a perspective. And of course, those, I would say before I pass you guys, and then in some, markets we see in Europe as well as Asia that are new to hyperscale, you're seeing, that, anywhere give or take around 3 to 5 megawatts to start for an availability zone. And then, sometimes I think the hyperscalers obviously have a good picture of what demand looks like in the market, but they tend to be conservative if it's a newer market, and give themselves room to expand up so that they don't overbuild it out. So Jabez, any perspective to add?
Yeah, so I think sizes of AZs is dependent on market and provider. So for example, a tier one market like Singapore, Hong Kong, Sydney, Tokyo would have different size AZs versus maybe a market like Jakarta, Seoul,
Madrid.
Thailand,
Yeah.
Philippines, and Madrid, for
Yeah.
example. So I think, to put into perspective, I think what we're hearing in terms of AZ sizes is um, eventually the hyperscalers look to have around 200 megawatts to start per cloud region. That's a rough number that I've been hearing across markets in APAC. 200 megawatts per cloud region, split roughly evenly across maybe 2 to 3 AZs. With the line of sight, they want to eventually get that 200 megawatts to anywhere between 500 megawatts to 1.5 gigawatts in the next 5 years, 5 to 10 years. And that's why you're seeing this kind of flurry of hyperscale builds and lots of land banking, especially in markets like Sydney and Tokyo. And Hong Kong, for example. I think we're still, based on what we're seeing, we're still very early days in the AZ expansion phase. And then in Europe as well, I think Europe is just starting to heat up from a cloud region and AZ expansion. So you're looking at the hundreds, right, of megawatt for AZs for hyperscalers, and I think that's kind of that tier that we're seeing, right? And just look at the data center sizes. It used to be that a 20 megawatt data center was considered a pretty big data center, 3 years ago. Now it's like you're land banking 300 megawatts or 200, 300 megawatts at a time. So that's the quantum leap that we're seeing in growth. And we're even hearing even crazier things out of certain markets in the US, like in Northern Virginia. There's a provider that's land banking, 1.5 gigawatts of capacity, basically dedicating an entire city, right, to build that into a data center campus. So that's the scale that we're looking at in North America, and it wouldn't surprise me if that eventually makes its way to Europe and Asia in the future. Phil, if you want to add anything more to that, or should we hop onto that?
I would say what I'd add is that, of course, this is limited to a pretty small cross section of the 9 that we group into this category. So you shouldn't expect to see, I think many of you on the call, probably deal with an Oracle or an IBM. They are not building the way Jabez described. It's limited to that top group, and perhaps sooner than later, 1 or 2 in the China grouping of those 4, with Alibaba being probably the most obvious candidate, but that kind of scale likely only happening within China, not outside. So as that's relevant to you on the call.
Yeah, that's a good point, Phil. So outside of Singapore and Hong Kong, like Oracle, IBM, Alibaba, Tencent are basically deploying in like 2 to 5 megawatt chunks, whereas Microsoft and Google and AWS are deploying 10 to 20 megawatt chunks. Oracle has like a 4 plus 2 or 2 plus 2 type deployment model. So yeah, it varies by cloud provider. In that lower tier, that second tier of clouds, you're seeing smaller increments because they're just not sure like how robust their adoption will be, and they're also seeing pretty intense competition from the top tier hyperscale clouds. So that's why their kind of deployment size levels are very different in terms of size. So yeah, good point.
Yeah, and the same thing for the growth in those availability zones. So we haven't seen too much movement for an Oracle and IBM, and it's still pretty consistent. Whereas when we're pretty sure we're looking or speaking with somebody about one of the top 3, the numbers just skyrocket. I think what Jabez describes like a 4-5x increment. But yeah, something around there would be consistent, and we've seen that's pretty consistent, I would say, across the markets that we've spent time in, and that's inclusive of North America, Europe, and the developed parts of the Asia region. So yeah, I mean, it's a great question. I guess that kind of segues to Christian's other question around, so Jabez, I don't know if you can see it there, but he's looking for a little bit of more context in terms of leasing versus self-build across, I guess, I think other types of deployment models, and not just regions and availability zones. Maybe I'll start and you can pick up. I mean, what I would say is, so maybe I'll start with the local zone, edge zone kind of thing. Yeah, that's very early stage. I did throw some numbers out there in our published research around how big some of these original local zone deployments were. But let's just say, low single-digit megawatts probably seems reasonable, depending on the location. I just don't think we have a sample size enough to really make a call. So take that 1 megawatt, with one or two with a grain of salt, until we see more build out. But you'll see less consistency. I think you'll see a much kind of broader range, because these deployments will be large, just different sizes and a bit smaller than, of course, the region AZ model. Same with those telco footprints. I think we've been hearing they're even smaller than that. So you're talking sub megawatt. The other thing I would add, which kind of ties in with this conversation, Christian, is that Jabez talked about the line of sight to hundreds of megawatts. Again, talking about core and compute regions, compute and storage regions. What we're also hearing on both the data center provider and hyperscale side is that the network, like to support this, then the infrastructure that supports is also growing at a significant rate, and these hyperscales are trying to plan out for the next 5 to 10 years. In some cases, for the biggest of these, of these guys, this is almost kind of rethinking how they're going to be doing things, and that's why Jabez mentioned what's going on in Northern Virginia. There's a significant kind of rethink in terms of how we cannot build the same way we've been doing for some of these markets as capacity continues to grow. So you can expect kind of, you mentioned content delivery nodes, network nodes are going to look almost like they're going to be the new availability zone. So they're going to creep up to the single-digit megawatts as those go into double-digit dozens of megawatts. I think that is not that far away, really, given just what we're seeing. I think that the planning for that sounds like, we don't get wind of it at early stages, we get wind of it later, right? And we think that it's probably the planning for that is well underway. So that means probably you're going to start seeing some of that in the US, the most mature markets, probably in the next couple of years. Tell me if I'm crazy, Jabez, but that's
Yeah, no, that makes sense to me. And in terms of the leasing versus self-build, I do think that the hyperscalers do plan, or at least the intention for the hyperscalers, they want to do more self-builds moving forward, especially in tier one markets where they have steady, predictable, proven demand. And so I think they'll primarily focus in two tranches, right? They'll look at tier one markets that are very established, very high adoption rates, very stable, predictable workloads. And they'll also look at markets where there's access to cheap and renewable energy. So I think those are the kind of two self-build check boxes that they will look at as they look for building these sizable self-build campuses. And we still believe that they're going to continue to rely heavily on third-party co-location data center providers, just because hyperscalers, when they do these self-builds, they're not going to build them as fast as these colo providers. I mean, colo providers can build in like 2.5 years, whereas typically we see these hyperscale builds taking anywhere from 3 to 4 years. So they're a little slower, and that's why they tend to augment their self-builds with a lot of leasing. Before that, we've seen that in markets like Singapore. I think we're going to see that in markets like Sydney, and we're going to see that in markets in Tokyo as well. And I think there's also these kind of new category of that kind of falls in between colo or leasing and self-build, depending on how you define it, right? If you're a real estate person, you may define it as a lease. If you're a colo analyst provider, you may see it as a self-build. But essentially, companies like a Yonder or a Goodman or Mapletree that are not really doing colo, but they are catering specifically for hyperscale deployments in terms of build-to-suit, triple net lease type of arrangements. So that's that kind of section of the market that we've seen a lot of activity in, and I think you will continue to see more activity in, because at the end of the day, it doesn't matter what model you use. At the end of the day, is can you make it easy for the hyperscalers to deploy and scale capacity in markets that they want to be in. And so I think that there's going to be different models to address that. Same with, I think Phil can talk for days on hosting infrastructure and how there's different flavors of hosting, but it's all about catering to the right application and scaling the right workloads. So I think we've beaten that question to death, Phil.
Yeah, yeah. I mean, and I would just add that an interesting kind of wrinkle within the marketplace is that retail, wholesale, but there's middle ground, different companies thinking about how trying to create opportunity in different ways. like I find it quite interesting what Stack Infrastructure is doing. I think they describe it as, I don't want to put words in their mouth, but like an overflow model, or a kind of a more opportunistic, like targeting locations and markets, where like Jabez alluded to, if you're doing a self build and there's a certain lag, you need to augment, or maybe you need to backfill your inventory, or there was some unforeseen capacity, expansions that you didn't plan for, and that you need something right away at hyperscale grade, and at the right capacity. And there are certain firms that are kind of following at least part of their business, kind of aligning with that opportunity. So yeah, I think it's interesting. It's not black and white anymore.
Yeah, and I think one more thing, Christian, I think worth mentioning is that the colo providers are spending a lot of time trying to re-engineer hyperscale deployment strategies. And so the easiest way that they've gone about doing it is just following where all the self-builds are, right? So like, for example, in Amsterdam in Amsterdam, QTS basically bought land or a data center site right beside the Google self-build in Amsterdam. In Sydney, for example, AWS has self-built in Eastern Creek, Smeaton Grange, and that's, you're seeing land banking a lot around that region as well, because ultimately these hyperscales, when they self-build, it means that they've for sure designated that region as a core AZ or cloud region, and they're going to continue to build out that region in conjunction with other AZs. And so it's just kind of a low risk bet to say, okay, if they're going to invest in a self-build there, they're obviously going to need more capacity over time to expand those AZs. And so that's one strategy that they've used. And then, another way is, if you want to kind of predict and have high upside, you want to predict where the next AZ is going to be. And that's what PDG is doing in Saitama and Tokyo, for example, is, most of the Tokyo AZs are centered around Inzai, West Tokyo and Central Tokyo. And then they're betting that the next AZ cluster will happen in north of Tokyo, which is Saitama. So there's different kind of approaches to kind of reading into hyperscale deployment models. And so I think everyone's trying to figure out what the hyperscalers are thinking and trying to be ahead of the puck. So
yeah, Stack Infrastructure too. Ohio, not necessarily marquee, but hey, I heard there's a big AWS big cloud region there that everybody knows about, and kind of crept up here in Toronto as well, which is just starting to see an early hyperscale build out. For those of you who haven't followed the Canadian market, the original, the first phase of the hyperscale cloud build in Canada was actually in Quebec, in Montreal. It's only starting to hit the Toronto market. So we hit the hour, but I thought we maybe just go a little over and just maybe address two more. I'll take the first one. You take maybe we'll combine the two APAC specific questions.
We'll combine the markets. Yeah, there's like
Vietnam and Singapore,
Cambodia. I'll take maybe those.
I'll address Jeff's question. Thanks, Jeff. Maybe this one, we've heard about hyperscalers moving into smaller tier 2 markets. Do we see that happening, or do we foresee them doubling down in the larger tier 1 markets? Again, as it is with much of this stuff, I think it's dependent on the market and dependent on the hyperscale cloud. So an AWS is a really good example of someone that I think you've seen. My take on it is probably not going to enter too many tier 2 markets in, say, Europe or in North America. They may well continue to build big in the fewer locations and then fill the gaps with something like local zone. And those deployments will also be pretty darn big over time as well. But if you go to the kind of the European context, I think is really fascinating, because relatively large landmass with smaller countries, no kind of it's not a large, there's no single large country covering that geography, and of course borders matter a great deal. So are hyperscalers moving into those tier 2 markets? Yeah, they are. They can and they are. We see Microsoft, even entering countries like Greece, not markets you would think of as tier 1 markets, but have reached a certain point of critical mass where they're going to build in country infrastructure. I don't know, Poland, probably maybe not in people's minds as a tier 1 market, is seeing a significant cloud build out from multiple cloud providers. Probably fairly categorized as a tier 2 market. We are working right now, really pleased to say we finished our study of Madrid in Spain, which is another non-hyperscale market at the moment, but will kind of change overnight. Maybe probably as early as late this year, early next, when a lot of these clouds come online. So these tier 2 markets, absolutely. I think it'll depend. You may see less of it, as I've argued, in a market like the United States, and that's unique because of it's a large country with many states, whereas Europe is a large landmass with more countries, more jurisdictions, and then you can take an example like Canada, large landmass, fewer clusters of large populations. But is hyperscale going to move to the tier 2 market in Canada, which arguably is Western Canada? Yeah, I think you almost have to. I think that the inevitable. I think in the big picture, there is a certain level of inevitability as digital infrastructure, internet infrastructure, cloud usage continues to see forward momentum. That whatever that level of critical mass is, increasingly more populations, more parts of the world will hit that. And so you'll see public cloud look, once it hits that point, then they can, they're pretty much forced to come up with some kind of solution, whether it's a traditional region availability zone model, maybe it's that, or maybe it's more an edge-ish type of model. Maybe it starts with the network node connecting to the region before they build up the compute infrastructure. But it's definitely gonna happen. It already is happening. So thanks for the question. I'll let Jabez finish off on the APAC specific markets. And then, for the rest, we'll try to follow up with you or send us an email. Our email's on the screen if you didn't get your question answered.
Yeah, I think for the questions from Nitapong and Joshua on emerging markets in APAC like Vietnam and Cambodia, I think those are interesting markets, and eventually hyperscale cloud will make their way there. I think, to be honest, I think it's still a little bit early in the game to be thinking about doing anything meaningful in Vietnam, because I think right now the hyperscalers are primarily focused on making sure that they address large addressable markets in Asia like Jakarta, Mumbai, and then these other India regions like Delhi, Bangalore, and Hyderabad, and so on and so forth. So, and even Seoul, right? I think it can be part of that list. So I think those are the near-term priorities for the hyperscalers. I think eventually and then also we're seeing, because of the Singapore moratorium, markets like Kuala Lumpur and Johor start to see increased number of activity. GDS is building a 54 megawatt data center in Johor. Keppel is building in Johor. More providers, I think, will look at Cyberjaya as well. And Jakarta is also benefiting from the Singapore moratorium as well. So, those markets, I think, are more near-term priority for the hyperscalers versus Cambodia and Vietnam. And it will be fairly, I wouldn't say easy, but it'd be fairly easy to predict when the Vietnam and Cambodia markets are going to start trending up, because you'll first see the deployment of on-ramps. So once you see kind of multiple cloud on-ramps start to land in Cambodia, Vietnam, that's when you need to start kind of turning your heads to those markets. And then, you may see kind of that being augmented by local zones or kind of edge locations or edge deployments there. And then from there, that might ramp up to larger compute nodes, because the hyperscalers are not just going to go full-on compute node AZ in a market like Vietnam and Cambodia, where it's kind of a new market for them. They're not entirely sure what the demand looks like there. There's not a large number of enterprises and Fortune 2000 companies relative to the other markets across APAC. So they're going to be fairly cautious in terms of scaling the capacity in those markets. So you won't be in a situation where it's just going to accelerate from 0 to 100, right? In some of these kind of tier 2, tier 3 APAC markets. So I think there will be signs that that the hyperscalers are going to move into these kind of other markets in APAC. But I do think those near-term markets that I mentioned will be the priority. Phil, do you want to wrap it up, or do you want to what are we doing now?
Yeah, I think we're going to wrap it up. Get a glass of water. I'm feeling pretty dehydrated. But yeah, thanks for everyone. I think there's still 20 odd of you who stuck it out the whole way. Appreciate you guys sticking around. As I mentioned, if we didn't get your question, please email us and we'll try to provide some feedback. And as Jabez said, we're going to post a recording. So if you want to share with your colleagues, please feel free. Hope to see you guys next month. Enjoy the rest of the summer, and keep up on our email distribution. You'll find information about our next events. Unfortunately, they're going to be online, and we had hoped to see you guys this year, but we'll see how it plays out. But be well, and talk to you soon.
Yep, thanks guys.